use very basic screens like price book value, price sales. We try to identify from the ones that have dropped the most, the ones where the balance sheet is intact, looking at a Z-score, for example. And then we think, is this something we want to look at further? So we will not shy away from companies that offer deep value opportunities if margin of safety is high enough, but we try to be more involved in businesses that actually have better growth prospects in the future. So more the beautiful business is what we're more attracted towards. And trying to get these ideas, we look at return on assets, return on capital employed, so that we see, is in the past, has this business generated decent cash, and if that's the case, is there a reason why that could continue in the future? Are they in the right markets? What's the industry situation like? We like oligopolies. That's very nice, because as long as they still compete and that's not challenged, their margins, then that's good to be with them. And then we do the moat analysis. So structurally, we'd like to identify the competitive advantages, where at least for the foreseeable future, it is most likely that those rates of return can be achieved going forward. And then when the margin of safety is there, we just go for it. Of course, we look at what are other guys doing. We try to look at our network, and then when we get involved in situations that where we're not 100% sure, we just have to go there locally and dig deeper. We go to conferences. We try to speak to industry experts and do an in-depth research so that we really understand what's happening in this business. It even gets to the extreme that we will try to put people on the supervisory board or influence, together with other value investors, that we've got people sitting on the supervisory board that will do what we have in our name, which is make sure shareholder value is being generated. And we're not worried about the next quarter. It's much more that we want to make sure the business is run for the long term, the right way, because we try to be there and see this as a core holding and not just as a stock to flip in and out of. So this is really generating ideas through screening is obvious. Lots of reading, annual reports help a lot, thinking about other industries, and always having the mindset of it's not necessarily the best way to look at finding the best gold digger, but much better try to identify the guys that actually sell the shovels. And so that's a more safe bet. And we try to apply that kind of logic to all the investments that we make. And since we're not the only ones thinking about it, we don't shy away from looking at what other good value investors are doing. And sometimes they have been early and we even get a better price. So it's we love the exchange with other value investors, and that's why we also started the club, the Zentrum for Value Investing, where I'm participating, where we try to exchange ideas, and we also actually really live that. We get the shares that we will take to an annual shareholder meeting from other value investors, because they know we're experts, they're happy to let us do the job. And similarly, we are happy that we don't have to go to every annual shareholder meeting ourselves, because there are people that we can trust, that we know they do exactly the same thing we're doing, because they have the same mindset, and that helps us. It's good to have a good value community invested in stocks.